Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. So lately we have had quite a few members, new members to our community, and a lot of them have asked questions about I don't have a lot of money, where should I start, what should I buy, what should I do? And that kind of got me thinking about what just investment in general is all about. And that is just everyone has a goal. First of all, what is your goal? What do you want to achieve? And how long do you have to achieve that goal? So what we're going to talk about today is this idea of time horizon when it comes to investment. A time horizon is your investment timeline. So on how long you plan to hold an asset before selling it. So the selling part, we're not going to do that yet. Okay, we'll talk about that in a bit. But it's what I want to talk about today. If you are in your 20s, what should you invest in? If you are in your 30s, what you should invest. If you're 40s, and I'm not saying just the age kind of things. What I'm saying is, I want you to think about where you are right now, okay, what age you are, and do you have 10 years before you retire? Do you have 20 years? Do you have 30 years? Do you have 40 years? What is your time horizon? That's what I'm talking about. And this is really important because if you don't know what your time horizon is, and what I mean by time horizon is when are you going to retire? When are you so you're going to build a portfolio between now and then, okay? And when is that then? Okay, what is it? What number are we looking at? But when you're 50 and you now, say, for example, in your 20s, okay, you've got 30 years. Your time horizon is 30 years. If that is the case, should you be investing, okay, high growth stocks? Should you be investing, old companies, mature companies? What is basically what investment, what should you invest in? Whether you should invest in ETFs or whatever it is. Basically, the whole idea is that you need to define your time horizon first of all. Once you sorted that out, then you can look for the companies that suit your needs. The companies that will be, suitable for your needs. That's the most important thing. And that's what we're going to look at, okay? Because when you look at the stock market and you see something like this, there's so many different companies. When you watch the news, there are some new shiny companies coming up every day, okay? And for example, if Microsoft has now come up with a new product, blah, 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 everybody's going to jump in. Everybody's going to buy a Microsoft product. What if your time horizon doesn't suit your time horizon, and your time horizon is maybe less than what this company is offering right now, or whatever the case might be, okay? So not every single company in here will suit your time horizon. What I mean by that is, for example, the oil companies. If you are in your 20s, you shouldn't be investing in oil. That's my opinion, okay? Because by the time you're 50, whatever, and you want to take that investment, oil companies might be just long gone. I don't know. I'm just speculating, okay? That they might be gone by then. And if that's the case, then go and find something else. What would be around then? Will it be healthcare? Will it be other companies? So that's what we're going to do today. We are going to look at how you should invest based on your time horizon. But before we get to that stage, I want you to help me out, okay? It takes a lot of time, I'll be honest with you, to put these videos together, right? I just want you to basically give this video a like. If you are new to the channel, okay, please subscribe. And if you have any questions, as always, let me know. A couple of you have asked me what I'm using. Okay, this account is basically Trading 212. I also have a Freetrade. This is I don't know, in the UK right now they don't take any new customers, but some of the European countries they are taking new customers, okay? So Trading 212, I have the link in the description section for Freetrade and Trading 212. If you end up signing up with them, you'll top up your account. I think you get like a free share. I get a free share. If it's not Sharia compliant, sell it and give it to charity. If it's Sharia compliant, and you can keep that stock, okay? Right, so let's have a look. So what we're going to do first, we're going to look at if your time horizon is between basically up to 10 years. You only have 10 years. In 10 years time, you're going to retire and you're going to withdraw some of your money. You're not going to withdraw every penny you have, but you're going to start with the withdrawal process, okay? You're going to start living off your investment. So you only have 10 years between now and then, okay? That's your time horizon. What should you be doing then? One of the things we need to look at is the dividend yield. Okay, because if your time horizon, You shouldn't be investing in companies that pay just 0%, 1% or less than that. Okay, you should be looking at 3 to 4% yield, in my opinion. Okay, because that is something that's gonna take you closer to your overall portfolio. Depending how big your portfolio is, you might still be able to live off your portfolio if you've got a yield between 3 to 4%. And what return are you expecting? Because if you're looking for 3 to 4% yield, remember these companies that pay 3 to 4%, they're not high growth stocks. Okay. And for that reason, you should be looking about 5% to 9%, 10% give or take. And that is a decent return for basically 3 to 4%. So the companies that I would consider are the companies like Amgen, for example, that has a 3% yield. Okay, they have a dividend safety. This is important. Why? Because you don't want this to be, to cut. You want this to keep increasing, okay, every single year. And you don't want this basically to go down. So 75% is very healthy. Okay. Anything above 60 is very, very healthy. Okay. Then you got return, total return. Total return basically means, okay, this data comes from Morningstar. And for the last 10 years, this company has returned 15.83%, including dividends. Okay. Including dividends. That's basically including dividends. And the weighting for the portfolio here is basically something I just made up. Okay, so let's imagine you only have 5 stocks in there. I just put 20% there. But what you need to do is think about, I think for me, from 10% and below, that's fine. Up to 10%. You shouldn't have one stock that's more than 10% in your portfolio. Because if anything happens to that company, then you're going to lose all of that. So diversification in terms of weighting wise is very, very important. So I will say, give or take, 5 to 10% maximum. Some people will say 5% is the highest. Some people will say 10%. I'll go with 10% because I do genuinely, I'll show you quickly. They've gone down quite a bit, but Microsoft at some point was 10% of my overall portfolio. Okay. Some point last week, I think it was Johnson & Johnson was about 8%. So for me, I'm comfortable with up to 10%. But for you, you need to think about that. So what are we doing here? We're looking at the dividend yield of 3 to 4%. We're looking at safety of basically anything above 60%. And we're looking for 10%, basically 5 to 9%, up to 10% basically. And when you look at Merck, for example, again, it meets that criteria, 99% dividend safety. So that means they're not going to cut anytime soon. You got your 11% return. Okay, 3M, another stock, almost a 4% dividend yield. Okay, and then you can see 75%, 8% total return over the last 10 years. Again, past basically performance does not guarantee future returns, obviously, but this gives us an idea of what these companies will return in the long run. Okay, that's the important part. That's the one thing I need you to understand. Then you've got UPS, again, another 3%. You've got Clorox, for example, another 3%. All of these companies are very well-known companies. Okay, these are pharmaceutical companies. This is basically a company that sells almost every single product on earth. And UPS, delivery-wise, and Clorox, again, all that cleaning stuff. They are very well-known. They have a safe dividend, okay, and they have returned at least 5 to 10% every single year over the last 10 years. Okay. And the weighting, you decide whatever you want to be. So if you own a portfolio like this, you can expect about 3.31% on average on your dividend yield, basically. Okay. And you can expect about 11% growth. That is really healthy. Okay. And when you retire, if you retire with something like this, you're getting you 3% of whatever your portfolio is. Okay. And on top of that, you get price appreciation. Okay, so remember, this is price appreciation as well as the dividends. This is the total return, not just the price appreciation, okay? And 11%, that is very, very healthy. So if your time horizon is about 10 years, then maybe this is a portfolio that you should look into. If your time horizon, on the other hand, is basically 10 to 20 years, so basically that's the rough estimate. That's basically where you are. And 2 to 3% yield is what you should basically expect. And then hopefully total return of basically 10%, more than 10%, sorry. Okay, so you got Home Depot, a very well-known company, almost 2.5%, 99% again. Look at that total return, 21%. 21%. Then you've got Cisco, Similar sort of a situation, over 10% again, almost basically 3% return, 91% dividend safety. Johnson & Johnson, 2.36% of dividend yield right now as we speak. And these companies do increase their dividend every single year. Okay, so that compounding effect is actually will be perfect. And if you reinvest in the dividends, okay, that you receive from these companies, will buy you more shares, and those shares will pay you more dividends, and the dividends will pay you more. You buy more shares, and then the compounding effect takes place, and that is the important. Okay, and that's the beauty for basically when it comes to investing in the long term. It's really beautiful to see. I have only been investing for 2 years, and I haven't seen that yet. Okay, I'm waiting for that moment where I see the compound effect take place. Because when you get in those dividends, say for example, you're getting £200-300 a month of dividends, and that gets reinvested into your portfolio, and that generates more money. That's when you will see that basically the massive compounding effect. Okay. Johnson & Johnson, 75% dividend safety. Then you've got 12.66% of return in terms of returns. Why? Look at this one. Check this company out. You get almost 3%. It's 67% safe, and total return of almost 33%. Then you got air products and chemicals. I do own all of these stocks, by the way, just to be on the safe side, just to let you know. And again, I own every single company here apart from Clorox. I started a small position in UPS very recently. I've only bought like a half a share or whatever. And then, yeah, I own every single one of them apart from Cisco, and Cisco is on my list. I'm watching that company. It went down actually quite a bit yesterday. So it's one of the companies I'm hopefully would add to my portfolio in the long run. So just to be on the transparent, I do own a lot of these stocks. Air products and chemicals, again, you got 2.6%, 95% dividend saved. Okay, and then almost a 13% total return. Absolutely perfect. So if you're looking for basically 10 to 20 years, okay, and that's your range, then obviously you might need to look into this type of companies, because again, you get the dividends there. Okay, they have a room to grow this dividend because they basically safety wise, they're perfect, and then you get more return for your money, and that's really important. So you're getting 2.6 overall portfolio, and then you get about 18% of total returns, 18% of total returns every single year for the next 10 years. That would be absolutely beautiful. Right, the next one is the 20-year plus, so 20 years and plus. This is what we're looking at. So if you are quite young and you start a new investment journey, and say you're in your 20s and you basically have say 20 to 30 years, whatever, then you shouldn't be running after basically this type of stocks. Maybe own small, for basically like say about 10% of these companies in your portfolio, but your main focus should be, in my opinion, 0.5 to 3% yield. That's basically what you should be looking for. Okay, and the companies that have that kind of yield and returns is okay. So you're looking for return of over 10%. Microsoft, very small dividend, basically, but is 100% safe. That, to me, this means it's definitely going to grow in the next 10, 15, 20 years. And then you've got the return of almost 26%. Then you've got ASML, okay, which is, I think is a Dutch company and a semiconductor company. Okay, I think they do some of the cleaning. I can't remember exactly what they do, but they are very well known. And any ETF you look at for the semiconductor, you will see this company. Okay, huge company. And then you got 0.56% dividend yield, 89% safe. Again, 26% again in terms of total return. Waste management. Who would think a garbage companies that basically collects garbage, will actually give you this sort of returns? This is what they've done in the last 10 years. Look at that, almost 18%. Okay, dividend is actually quite healthy. Really overpriced right now. I used to own it. I actually sold it. I'm going to do a video very soon, inshallah. But yeah, I've sold it because I had only 1.3 shares. So I got out of it. Hopefully it will go down to my price range, because I really would love to add this company again. 1.59, 99% safety. Again, almost 18%. Visa, another company that I own in my portfolio, very low dividend yield, 99% safe, 22% total return. And Lowe's, another company I own, 1.57, 93%, almost a 22%. Now you're getting 1% yield, okay, which is fine, okay, because you are getting total return of 23% almost. So you gain 23% as return. So if you are 20, basically, if you've got 20-year horizon, okay, time horizon, then focus on the companies that will be around by the time you hit to basically your retirement age or whatever your target age is, okay? But you, in the long run, this will start increase because this is 100% safe almost, and this will continue to grow. It might not grow every single year, 25% or whatever it is, but it's really important that you look for high total returns of high growth, okay? And you can find these stocks. It's not that difficult to find. There's loads. I've only selected 5 for each category, but there's hundreds of stocks that meet this type of criteria. When you look at here, you can find so many. I can just say Nvidia, for example, is one of those companies, okay? Actually, I'm going to talk about Nvidia in a second. If you talk about Intel, for example, if you've got 10-year horizon, basically time horizon, Intel will possibly be perfect because it's undervalued at the moment. They're doing a lot more. Basically, they're building all these factories. By the time you basically 10 years finishes, they will probably come back, basically make a comeback and take some shares away from, or market share from AMD and so on. Okay, so you really need to focus on your time horizon. Then I've included, okay, companies that will give you a total return of 15% or more. Some pay want dividends, but majority of them do not. And this includes AMD. So almost 30% total return. Salesforce, almost 17%, 17.5%. Tesla, Tesla return in the last whatever years. Okay. But again, will Tesla give you that much again in the next 10 years? I don't know. The answer is, I don't know. Okay. It could be, or it might not be. But again, you might, even if that doesn't happen and you get half of that, you're getting 32%. 32% total returns of your investment. Absolutely perfect to me anyway. Adobe, another company that I own in my portfolio, 30%, almost returned 30% in the last 10 years. Okay, and then you're looking at basically Nvidia, 51%. Nvidia, is it going to grow? I actually watched an hour and something video that was posted by Nvidia on YouTube. It's absolutely brilliant. It basically shows the vision of what they're going to do. I absolutely love this company. It's overpriced still, but this is one of the companies that I'm definitely going to own in the long run. If not, I might actually own it in my children's portfolio because it's important. Like, I think they're going to change the world, the way things are going, the things they're doing. They're no longer just doing basically the graphic use, the GPUs and all that stuff. They are actually getting into all sorts of industries. Okay, they're becoming software as well as the hardware side of basically company. So yeah, we'll see how that one goes. But yeah, this is another bonus basically thing that I've tried to include. So 15% or more if you don't care about dividends. Okay, again, I know for sure AMD, Salesforce at some point, Adobe and Salesforce will probably start paying dividends very soon, and Nvidia already does a very, very small one. So these, in my opinion, okay, again, I'm not a financial advisor, but and genuinely, I was thinking about when I was doing this, I was thinking, I wish I could find somebody out there on YouTube or anywhere. When I was starting my investment journey, if I had something like this, I wouldn't have made, the mistakes that I made, genuinely. Because this kind of thing, what I've done here is basically what I would have liked to see. And that's the reason I started this whole channel, because I couldn't find information easily available to me, and it was hard to find. The other thing I did that really helped me is basically reading. I love reading books, and I read, Peter Lynch's books. I've read basically Benjamin Graham, The Investment in the Intelligent Investor. All of these books really, really helped me. Okay, and if you are starting your journey, educate yourself first. Don't jump straight away into the stock market. Learn about the matrix. Learn about the investment journey. Learn about how basically, and think about the long term. Once you've got, your time horizon, then research about the companies that you think will give you the kind of returns that you want. If you got, 20 years from basically between now and basically you're going to retire in 20 years from now, then invest in the companies that you think will be around 20 years, will give you the kind of returns that you expect, and so on. Okay, I wish this was helpful. I hope this was helpful. Okay, I'm fasting, so I'm kind of all over the place. But yeah, I hope, this was helpful. Genuinely, I wish someone did this type of video when I was investing, because genuinely, the most important thing is to think about your time horizon. And guess what this does for you? When you know your time horizon and you know in 20 years time, you are going to basically take out some of that money and do whatever else you want to do with it and enjoy your retirement, inshallah, with peacefully, okay? Or even have an early retirement, whatever the case might be. Once you know that, then you're going to forget the noise. Because if your Microsoft is one of those companies and you have a good idea what the company does, where it's heading, you will buy it when it goes down. And that's it. And that's really the most important thing in my mind. That psychology. This helps you understand. This is why I genuinely don't care if the market is down, say 10% today. I look at my portfolio, I look at my watch list, I say, okay, what can I buy today at a cheaper price? And if it is Procter & Gamble, then I will do that. Okay, I don't care what's happening, the noise, because people just sell it because of fear, because of all this madness that's happening out in the world. And you watch CNBCs and all of that stuff, and they say, oh, stock market's down 20%, blah, blah. Yeah, fine. But I know my time horizon. I know Microsoft is not going anywhere, and I'm going to collect that basically dividend, and I'm going to basically get that total return, and that's what I want to do. So I hope this is helpful. If it did help you in any way, please just give it a like. Comment on the comment section. Let me know if you have any questions. And finally, can I ask everybody, what is your time horizon? What stocks are you buying? Okay, and if there are any stocks that you would like me to research, inshallah, in the future, let me know. Everything I've done so far in the last few months is just listen to you guys and actually do the videos that you really want. I have other plans and things that I want to share. Inshallah, I've actually got good news. I started a new investment thing that I've actually been doing since September. It took very long time. You probably will guess what it is, but inshallah, I'm going to share that with you guys as soon as I finish the video. I've started already, so I'm going to put it together and share it with you, hopefully by next week, inshallah. Take care, everybody. Assalamu Alaikum.